Are you a small business owner who's ever wondered where all your net income from last month went? Maybe you just don't know how much you should be paying yourself, setting aside for taxes, or reinvesting into the business for growth. Or maybe it feels like anytime you have a good month or a good quarter, you blink and the money just disappears. If you've ever wondered any of those things or you have any of those questions, stick around because in this video we're going to talk about the Cashflow Waterfall, which is a concept that I use with my clients and in my own business to map out the flow of money and figure out how much money should be going where. Before we get into it, I'm Nick Kobos, founder of Saga Accounting Solutions, a small accounting firm that's helped dozens of clients with their bookkeeping, taxes, and business strategies. Some of the most common questions that I get from clients revolve around how to allocate money within their businesses, how much to set aside for taxes, how much to set aside for growth, and how much they should be paying themselves. One of the concepts that I use to help clients kind of think through this is called the Cashflow Waterfall. So what is a Cashflow Waterfall? The Cashflow Waterfall is a graphic depiction of how money flows through a business. And the purpose of the Cashflow Waterfall is to help us visualize and systematize the flow of money to make sure that all the business's cash flow needs are met and that we're setting aside the right amount of money for different business priorities. So starting at the top of the Cashflow Waterfall, we've got revenue. And revenue is the water that pours into our waterfall, and it starts up here at the operations account. The operations account is a business checking account. The purpose of the operations account is to serve as a central point for all revenue and all expenses to come in and out of the business, which helps keep our bookkeeping clean and prevents us from mixing personal and business funds. From the operations account, we'll pay our expenses, and so if you have any business credit cards, these should all be getting paid straight from the operations account on a weekly or monthly basis. As a general rule, we want to keep enough funds in the operations account to make sure that we have cash flow stability and we're not going to run into unforeseen cash flow crunches. In our business, we usually leave 2 times monthly expenses, including owner's compensation in the operations account. But as a general rule of thumb, depending on your cash flow situation, predictability, and the timing of your revenue and expenses, we usually recommend leaving between 1 and 2 months of expenses on hand in the operations account at all times. Below the operations account, we have our tax savings account. And our tax savings account is a business savings account where we set aside money at the end of every month for taxes. How much money we set aside depends on a number of personal and business factors. But, as a general guideline, if you are somebody who's subject to self-employment tax, you'll usually want to leave somewhere around 25 to 30% of your net income, so your profit at the end of every month, set that aside and put it in the tax savings account. If you're not subject to self-employment tax, you may be able to get away with setting aside as low as 15 to 30% net income. And again, that exact number is going to depend on your own personal tax situation. I always recommend discussing that with your tax advisor or your tax professional and making sure that you're setting aside enough money for taxes. The last thing you want is an unexpected bill when it comes time to file your taxes. We want to think of the operations account like a bucket. And so once we've set aside 15 to 30% of our net income for taxes, and we've filled up our operations bucket to whatever threshold we establish for ourselves, say 1 month's expenses, everything in excess of that is going to overflow the bucket and flow down into the next level of the waterfall. We're going to call that post-tax net income. And all that means is this is our profits after setting aside money for taxes. So below this little dotted line, we have the second level of the waterfall. Now, on the second level of the waterfall, we have 3 priorities. The first is going to be debt. So for businesses that have debt, we usually recommend setting aside somewhere around 50% of post-tax net income to making additional principal payments on that debt. And so to clarify, these debt payments are not your monthly debt service. Your monthly debt service should be counted as an expense, even though we don't expense the principal portion of loan payments. You should count on those monthly bills as being part of the 1 to 2 months worth of expenses that you set aside in your operations account. That way, when we get down here, what we're really talking about is making principal only payments so that the business can pay down its debt and improve its balance sheet position. The next priority on this kind of second level is going to be reserves and emergency fund. And so your reserves and emergency fund are exactly what they sound like. It's a business savings account where we set aside money for emergencies or to have as reserves. How much we want to set aside, again, is going to depend on a number of factors, but the main thing we're going to look at, what do our monthly expenses look like? And so generally we want to try and set aside somewhere between 3 to 6 months of expenses in our reserve account. Although these 3 to 6 months expenses do not need to include owner's compensation, whereas these do. Where on our operations account, we usually do want to include owner's compensation. Down here, we don't need to. And the reason that the business reserves or business emergency fund doesn't need to include owner's compensation is because in a perfect world, you as the owner should be setting aside money for emergencies and unexpected loss of income in your own personal emergency fund on the personal side of your finances. If that exists in your personal financial life, then you don't need to also account for it in the business side of your financial life. And so for our reserves and emergency fund, we usually want to be setting aside somewhere around 25 to 50% of our post-tax net income flowing down here. And then again, it's until we hit that threshold for 3 to 6 months expenses. The last priority on this second level of the cash flow waterfall is our distributions fund. And our distributions fund is where we're going to set aside money to pay ourselves monthly or quarterly distributions. We usually want to set the fixed compensation that comes out of the operations account for the owners at basically what the owners need to cover their personal expenses and their personal bills. We don't want to set it super aggressively because that's going to impact how much money we have to keep in the operations account and how much money we need to set aside for reserves. Instead, what we want to do is set up this distributions fund where we're setting aside excess money as a percentage of post-tax net income to reward the owners or to compensate owners for the performance of the business. And so, depending on the business's debt and emergency reserves kind of situation, here on the distribution fund side, we could be setting aside, anywhere from, let's say, 15 to 50% of post-tax net income. So the idea here is that this portion of post-tax net income will build up in this distributions fund and then be distributed out to the owners to kind of round out their compensation beyond just kind of the fixed compensation that we're accounting for on a monthly basis out of the operations account. Hey guys, real quick, if you're finding this video helpful, go ahead and hit the subscribe button or leave us a like. We're going to be putting out new videos like this every other week, and so you'll want to make sure that you're subscribed so you don't miss the next one. Anyway, let's get back to the video. All right, so the next thing is you probably noticed down here, we have growth. And so once we've kind of filled up and hedged all of these priorities and made sure that all of these priorities have been met, the next thing we want to start worrying about or talking about is growth, right? And so similarly to the operations account, this reserve or emergency fund should be like a bucket. And once this bucket hits kind of our target cap, so let's say it's 3 months worth of expenses minus owner's compensation, once it hits that threshold, anything in excess of that threshold should overflow into our last account, which is going to be our growth fund. So our growth fund is going to be another business savings account, and this is where we set aside money for growth, because regardless of the industry that you're in, growth requires capital, whether it's hiring new employees, buying new equipment, buying new technology. In order to increase the productivity and the capacity of your business, inevitably requires cash. And so we want to make sure that we're setting aside cash for that growth and planning for that growth instead of reacting to growth and putting ourselves in a position to experience cash flow issues and cash crunches. Kind of the last thing I'll add here is folks may be wondering, okay, so how does money move between the business, or how should money move between my business and my personal life? And so, we can add your personal life or your personal financial life into your waterfall. And so to do that, we'll come up here, and just like you have an operations account, you should have, your personal checking account. And so money should only move between the operations account and personal checking and vice versa, right? And so the only flow of money should be from here to there, right? Those are the only two places where money should move, or the only way that money should move between your personal life and the business. That's really just to keep your bookkeeping simple and prevent messy financials. From your personal checking, you can set up a similar waterfall to this in your personal life. This is kind of beyond the scope of this video, but over here in your personal life, you can draw out your other, your own personal financial cash flow waterfall, right? And so maybe you have retirement where you set aside money every month, and then maybe down here you have debt, emergency fund, maybe you have kind of other savings goals
maybe kids' college or down payment for a house, whatever. But so you see how this concept can be applied to your personal life as well. And it helps to kind of draw all of this out. And so and again, set percentages or fix rules for how much should be going where, right? And so then once we have this whole waterfall mapped out, well, then the next thing we want to do is we want to put in place the systems to make sure that the money that we've set aside on paper actually gets to where we intend for it to go, right? And so the easiest way to do that is to just sit down at the end of every month, review your financials, something you should be doing already. And at the end of every month, when you review your profit and loss, you sit down, you take a look, and you just make the transfer, right? And so we say, hey, this month we had $10,000 in net income, and we've agreed to set aside 20% of that for taxes. Well, boom. So $2,000 is going to go into the tax savings account, which leaves us $8,000 for post-tax net income. Okay, now what? Well, we've got debt, and we've agreed to set aside 50% of our post-tax net income of what makes it below this line for debt. Well, we have $8,000 left. 50% of that's going to debt. Boom, we just made a $4,000 principal payment towards paying down our debt. Maybe we agreed to set aside 25% for reserves and emergency fund. So boom, $2,000 is going into our reserves. And then maybe we said that the remaining 25% would go to distributions. Here it goes into the distribution fund. So that at the end of the quarter, we can pay ourselves out distributions and compensate ourselves that way. So hopefully you found this useful. This is something that's really easy to do just on a sheet of notebook paper. It takes about 15 minutes. Sit down and just kind of draw out your own cash flow waterfall for your business and if you want to, for your own personal life. And as you're doing it, just put numbers on paper, set rules for how you're going to determine how much money should be going where, and then stick to it. And hopefully you'll find that this helps give you additional clarity, additional ability to plan and kind of forecast for the future, and helps you stay organized with your business finances. If you found this video helpful, please go ahead and subscribe or drop us a like or a comment. We're going to be putting out new videos like this every week. We're going to be putting out new videos like this every other week. Thanks for sticking around to the end of the video, and we'll see you in the next one.